All right, family, what's going on? In this video, breaking down the currency, we're talking about the DXY, right? The United States of America. Right now, they finished pretty. Wait, hold on. Wait a minute now. I didn't see that. Did we start yet? No, we didn't. Ooh. Huh. Interesting. So last week we finished strong with a bullish and engulfing. It was losing momentum here, but when you check it out, this is an important level, a resistant turn support, and this is dealing on the weekly, right? So that's a strong level, and they bounced back. I guess the numbers was looking pretty good. Maybe the nature of the market or whatnot, but this is very funny because you know this is a deceleration candle. This is a small candle. It's losing its momentum. Um, Breaking it down to the daily. You see that internal change of structure here. Okay, boom, that's fine. Right, that was the last lower low there. This candle here broke up to here, right? Okay, fine. And breaking it down to the 4 hour. Okay, so it came back up into the supply zone here, and you see these many candles. It's losing its momentum. So I guess what I would be thinking on my end is what type of data that would come out for it already tested this level. It's already here. What will make the dollar actually lose its momentum and go down and depreciate? And so that's what we're going to get straight into it. Open this up a little bit. Ooh, not too much. Sorry, y'all. Oh, man. Alrighty. So, okay. Right now, U.S. have a lot of data. So the global, this was pretty resilient. Manufacturing, pretty resilient. That was December. Not worried about it. New orders. So that demand is still there. Still got to understand the prices, but right now, so this looks pretty good. Monitor manufacturing pricing, which could put a strain on producers, possibly. Also, this could add to inflation increasing. So I'm keeping this in mind for myself. But overall, it looks pretty good. Now, the article with the manufacturing PMI said the improvement was broad-based, signaling, signaling stronger demand and increased production capacity. Okay, indicating that manufacturers are ramping up output in response. Okay, so that's pretty good. Coming down to here, this is brand new composite. Okay, not too bad. It reduced from or declined from previous. Global, the services. Okay. Let me see services PMI. Oh, this is weak. Services. Business activity. Ooh, hit a hard hit right here. New orders. Oh man, I gotta take a look at ISM services, like ISM in general, because then you also have this. What is ISM? What did it deal with? So I really don't. I'm still learning. So once I know, I definitely post about it or whatnot. But right now, I'm monitoring the services prices. Don't really know too much. Overall, shows a mixed picture in the U.S. with the manufacturing so far. It's mixed. Up top, we went over, it was looking good. You come down to here, you're like, not so much, right? Excuse me, y'all. So then come in, that's cool. So let's see. So now looking at the composite, right? And what it is it's the manufacturing and the services together, and they put it in all one index, right? And it comes out with this. Now, the thing about it is that though even is resilient, it also declined from the previous. And what one of the articles was saying, it said that the weaker composite reading reflects a slowdown in business momentum, right? And but it's dealing with all types of factors, which is with the weather conditions. You know, we have the California, you have the global demand weakening, um, the U.S. government with the tariffs. So all this is dealing with that index as well. Also with the services PMI, the reason why it declined, some softening in economic momentum. So it kind of makes sense once you actually start to break down everything. I feel like once you get under that 50 threshold, which is contraction for economy, that looks pretty bad. So I'm keeping all of this in mind. It's a moderate economic expansion. So they're getting hit hard too with all these the trade wars that's going on, right? Um, the ISM services PMI said slower growth in business activity and new orders. That's pretty big over here, and that you see that significant drop, pretty bad. Business optimism. I mean that took a little nosebleed too. Um, I just feel that the U.S. is still strong, but the inner workings of America is starting to deteriorate. You see that here. We had mixed numbers here. It said the decline reflects growing concerns among small business owners, as 7 out of 10 components of the index deteriorated. Uncertainty is climbing. One major concern remains the persistent hiring challenges as businesses struggle to find qualified workers to fill vacancies. So keep this in mind, right? PPI, they're also over here, we're trying to get inflation down as well. But look how stubborn it is, right? Exceeded the core as expected. Okay, not too bad, but it still exceeded. So it's stubborn. This will keep inflation high, so I'm monitoring this data. Um, Industrial actually came out as well. And it did decline, but it's still resilient. Capacity is still strong. Let's see, 2%. That's still strong. Not too bad. Manufacturing production, not too bad. I feel like it still shows a overall mixture in the U.S. in general. So we have to keep a look at that and monitoring the data. Doesn't necessarily mean that we have to trade this data. Like, remember, it's about the overall picture of everything, right? So once things start to fall into place and it aligns over a course of time, make that trade, right? This projection, so geez, that looked pretty weak. But again, they projections, so I will. Oh man, I'm gonna actually be looking at that. Durable goods. They say only driven largely by transportation equipment. So overall, again, manufacturing sector shows a mixed picture of what's going on in the U.S. Now coming down to the consumer sector, right? Looking at the year over year, I mean, it's still pretty resilient here, right? It declined from the previous, but retail sales people in America is still spending money. Where they getting this money from, I have no idea. We are crazy over here, but month over month shows the underlying, like we starting to feel it. So that might actually pop up in the next reading. Now let me see, hold on. Month over month shows some underlying pressure on consumers, right? They are cutting back on spending because of the uncertainty of the U.S. economy. Consumer sentiment fell again. Pretty bad, actually, honestly. I mean, pretty weak. Consumers are not confident about not confident in the uncertainty and pressure in the U.S. economy. So, okay, not confident, yeah. So, given what the article said is that given the rapid policy changes, the outlook remains fraught with risk. Consumer sentiment has weakened noticeably in recent months, weighed down on policy uncertainty. Consumer also remains highly sensitive to inflation. So it's still an inflation problem here, right? With all these, the prices of groceries and everything, like we still feeling it here. And the concerns over the impact of tariffs have caused a significant increase about our trust in our own government, to be honest with you. Um, Coming down, CB consumer confidence took a dive. Now, one of the articles said a key concern is the sharp rise in inflation is sticky. Highlighted that the consumer sentiment has now declined for 3 consecutive months, pushing the index to the bottom of the 2 year range. Pointing out that pessimism about the future business conditions, income, employment prospects has worsened with the job market expectation hitting a 10-month low. In the U.S., the labor market is what's upholding the dollar to remain pretty much strong. So when we start seeing the labor market decline more than what they expect, the Fed no they have no option but to cut. They have no option but to cut. Personal income, pretty strong, right? But the spending, because of the uncertainty in the American economy, we're saving, we're cutting back on spending. You clearly see it in the data points. The labor market is still tight and holding up the U.S. However, consumers are cutting back on spending because of the uncertainty of the U.S. economy. Now, article says strong income gains alongside soft spending pushed the savings rate up to 4.6% from 3.5% in the prior month, within a month, right? So I guess I'm going to be looking at the labor market and the consumers and as far as with the U.S. economy. Now, coming down to the labor sector, ISM manufacturing employment, strong. And overall shows a mixed picture for the manufacturing sector in the U.S. However, this gives evidence that the labor market is still tight and upholding the U.S. Article said that the ISM surveys, the latest one, showing employment components improving with manufacturing gauge jumping. So which one would give out whether, is it that the manufacturing sector is for guidance to what will happen with the labor market? Will it actually go down? Or will the labor market itself, which is, since it's so strong, give forward guidance to the manufacturing sector where it will improve? Right? So I'm going to be monitoring the data. Now, the ADP employment change, let's see, pretty good, right? It's mixed, but it's give evidence that the labor market is still tight and upholding the U.S. Now, the article said wage growth remained elevated. So we're going to have to make sure we take a look at that, right? With annual pay increase for job stayers year over year, while job changers saw an even stronger year-over-year rise. The report reveals a dichotomy in the labor market, with consumer-facing industries leading the way, while business service and production lag behind. We kind of see that in the data, right? But that's why we keep monitoring, and while we monitor the data, we can better position our trades. ISM service employment, pretty strong again. Let me see. Initial job. Now, keep a look at this right here, meaning you're losing jobs. This was pretty strong, right? Now, what the article said is that the labor market flashed a potential warning sign as initial jobless claims surged to the highest level since December. We'll keep a look at this. Non-farm payrolls, that's jobs added. That's bad. Unemployment, tight. Hourly earnings, month, strong. That's why we seen the personal income was strong, but the spending, we cut back because we uncertain of what's going to go on over here. Participation rate is still pretty high. Average weekly hours did decrease, which we'll keep an eye on that. U6 employment is high, but what that means is that people that went to school that has a degree, right, for that high paying job, but now is losing a job and working a regular 9 to 5. And I'm just interpreting the data, okay? Because there's nothing wrong with working whatever job that you have. But somebody that has a high degree that went to school for some years, getting paid a certain amount for a certain lifestyle, and because of the economy, especially with the COVID things happening, now they lost that job and is just working a regular fast food job or a gas station job. That's what U6 unemployment is for. And really, you want to pay attention to this number, to be honest with you. But now what the article said, let's see, the downward surprise. Okay, we understood that one. So while the declining headline job creation might signal a cooling in the labor market. The improvement in unemployment suggests that the slowdown is not yet severe, still upholding the American economy. Um, Average hourly earnings, a sign that businesses are still competing for workers despite moderation in hiring, right? The labor force participation rate slightly higher, reinforces signs of a still active workforce. Labor market is upholding in this economy. Trade partner sector, excuse me, this thing be tweaking. Nothing new except for the export prices. I'm still trying to understand this, but I know this got to deal with the inflation and everything, and this definitely is dealing with the trade wars that's going on. So let me see. Central Bank, they had their meeting January 31st. They kept it, paused it high. What the central bank say? Reducing interest rate too fast or too much could hinder the progress of 2% target for inflation. That is their main goal. Now, reducing interest rate too slowly or too little could unduly weaken economic activity and employment. And so what you're going to take a look at is the employment, the labor sector, right? Because they also, it's risk to both sides, period, right? And so you can start to gauge and monitor this by looking at the labor sector to see if there's any type of weakness going on, right? Look at the core inflation, pretty high, pretty stubborn. Look at that, man. We'll continue to monitor dealing with trade wars. This could cause the Fed to keep rates higher for longer because of this. So the article said Menace highlighted several factors that could disrupt the disinflation process, including shifts in trade, immigration policy, geopolitical disruptions to supply chains, and stronger than expected household spending. They telling you what to look at to better position your trades. These risks suggest that inflationary pressures could remain stickier than anticipated, keeping the Fed on hold for longer. That's why they ain't cut rates, because of these readings. Month-over-month increase in shelter costs. So looking at the housing, jumping in energy prices, jumping in food, all of this is starting to spring around again, especially with dealing with the trade wars and the tariffs. Extended its upward streak for the fourth consecutive month. Consumers also remain highly sensitive to inflation, and concerns over the impact of tariffs have caused a significant increase. There's a lot going on here. A lot going on. Look at the 5-year inflation expectation. Still didn't get to the 2%. Right? This is within, let me see. Yeah, this is 5 years. Core PCE, the Feds look at as well. And you can tell here, very high, very stubborn. 2.5, like not going nowhere, not going nowhere. So I will continue to monitor this, dealing with the trade wars. This could cause the Fed to keep rates higher for longer in restrictive territory. Inflation data continues to show an uneven path towards 2% target, which they said is going to be bumpy. Given the rapid policy changes, the outlook remains fraught with risk. Consumers also remain highly sensitive to inflation, and concerns over the impact of tariffs have caused a significant increase. Yeah, U.S. is going to be a little bit longer. Let me see. This is, look, I'm not going to lie. This I have I'm on high alert, because with America, they big on the housing market. Like, that is a big thing over here. And I've just been seeing, they said it's doing okay. Like, sometimes you got to disregard the articles, piece everything together, because even the Fed, I mean, a higher up's going to lie about things, but you see what's going on. You're the one that's interacted in the economy. You can see what's going on, and you know when it's fluff. Okay. So my thoughts was monitoring, understanding the housing market is big in the U.S. and shows the overall health of the economy. The U.S. is still strong, but the inner workings of America is starting to deteriorate. Same, housing starts went down. I mean, it took a dive. Building permits took a dive. New home sales took a dive. Like, you seeing this, took a dive. Now, broadly speaking, U.S. households remain in good financial shape, supported by a still healthy labor market and a significant wealth. Yes, but I mean, again, we see what's going on here. The minute that the labor market start to go down, this is going to be a huge sell off for the U.S. dollar. All right. Um, what will keep the dollar to appreciate is that Fed power is not in a hurry to adjust interest rates at all, higher for longer. Personal income keep increasing and tells that the labor market is still strong. Inflation increasing, which will keep the Fed to have monetary policy in restrictive territory. Right, PCE prices increasing, same thing. Labor market is still being resilient and tight. Will keep the Fed from cutting interest rate and will remain in restricted territory. Now, um, what will be a sell-off? Business optimism decline, showing uncertainty about the future of the economy. Personal spending declining, which means consumer activity subdued due to uncertainty about the future of the economy. Retail sales declining, which consumer activity subdued due to uncertainty about the future of the economy. Consumer sentiment declining, showing uncertainty about the future of the economy. This will keep it down. There's a lot going on here, but it's really mainly dealing with tariffs. You could check that out for a bit, but I mean, there's some heavy hitters coming out this week, so we will definitely see. I will be posting hopefully day by day. I can work around my work schedule, but this is the last. I'm gonna try to do these monthly, so I won't be, all these videos being posted. I'm gonna do it monthly on each economy. That way we'll be able to keep up with everything, maybe discuss some things. So yeah, so I will give my watch list, what I'm looking at for the week, but that'll be in another video. So appreciate y'all watching these videos. One love, and y'all have a beautiful week. Let's make this money, but it's okay to just watch to better position yourself. That's all I'm saying. You don't have to trade every day, y'all. It's a blessing that we don't have to, for real. We can make money on our own time. So one love. Talk to y'all later. Have a wonderful